Hey, what's up, you guys? Welcome to the channel. So hey, look, in today's video, I'm here to share with you why you should stop obsessing and stop worrying about getting the most highest possible return in the stock market. Like, stop stressing that out. Stop, really getting yourself all worked up and worried about making sure that you're getting the most highest possible return, because that is not going to be the thing that you need to focus on the most. Now, you might think, well, why would I not want to get, the very best possible return? That's not what I'm saying. I'm not saying that you should aim for a low return. I'm just telling you that that's not the most important thing for you to worry about. And ultimately, it's not going to be the thing that's going to make the greatest difference for you. So that's what we're going to get into, why you need to stop worrying about returns and instead what you should be worried about. So with that being said, let's go ahead and get right into today's video. Okay, so if I'm telling you that you should not worry or not obsess or really, put your primary focus on trying to make sure that you're getting the very best possible stock market returns, like, why would I say that to you when it would seem like all logic would tell you that that should be the main thing that you should focus on? That's what most people are going to tell you. You want to make sure that you're getting the best possible, returns on your investment and on your money, because that's going to be the whole purpose of investing your money, right? You want it to grow and you want it to grow fast, right? Got it. But in my experience, that is not going to be the single biggest thing that is going to be the real life-changing thing when it comes to you investing your money in the stock market. Because this is why. Because if you focus on trying to just get the highest possible return, at the end of the day, if you are only investing small amounts of money and your overall brokerage account is just still a very small amount of money, the actual percentage return you're going to see is going to be great. Like, it's going to be a large percent. You might be beating the market by even say double, right? So yes, you will see that percentage. I was like, oh man, you're killing it. You're doing better than the market. But the actual net returns that you see, the actual numbers, when you see them changing inside your investing brokerage account, they're not going to be some numbers that are going to be life changing, in the way that you're not going to look at oh man, this year I had this amount of money, and then by the year end I got this whole other dollar amount that's wildly crazy than I did at the beginning of the year. That's not going to happen, even when you made a really great investment and your investment is doing well and you're beating the market. So what I'm ultimately trying to get at and what I'm trying to share with you in this video is the amount of money that you have invested in your stock market investments, your total amount of invested cash into your stock market investments, is far greater and far more important. And what you should really be focusing your attention on is really just growing those stock market investment dollars to as large of a pile of money as possible. And that is going to be far more important and far more life-changing when it comes to your year-by-year returns. And ultimately, it's going to change, your net worth, your overall wealth, and you're going to notice it's going to directly affect how fast and how significant your wealth building process is going to be, and how meaningful it's going to be. Because when you are investing small amounts of money, even with large returns, you're still having small amounts of money. But when you start investing large dollar amounts, or you have built up to a large dollar amount, even with very average or even below average returns, the amounts of those returns start to be significant. They start representing a large amount of money. So let's just use this example, right? I'll end up putting it, on the screen after I finish recording this video. Okay, so let's just take this example. You have $10,000 invested into the stock market, and the stock market on average is giving a 10% annual rate of return, right? But you're you know what? I beat the market by twice as much because I'm a really great investor. I picked really great investments, and you're beating it by double, right? So you're not getting a 10% annual rate of return. You're going to get a 20% annual rate of return, right? So beginning of the year, you have $10,000. End of the year, you get a 20% annual rate of return. What does your account balance grow to? It grows from $10,000 to $12,000, right? So as far as from an investing standpoint, you did pretty good. You're man, I smacked the stock market. The stock market someone investing into like the index funds or some, the overall general market, they got a 10% annual rate of return. I doubled it. Like I'm beating the market. I did really good this year, and that's great. And even if you keep that pace up and like you could do it year after year, but you still have small amounts of money invested, you're still not changing your life in any real meaningful way, or you're not really growing towards wealth in a very meaningful way. You went from $10,000 to $12,000. I think it's all fair to say we can all agree that $12,000, even $20,000 is not going to really change anyone's life. And it's not going to accelerate you to financial freedom anytime soon, right? Like no one's going to be sitting there like, well, I got $12,000 in my brokerage account. I'm about to, be financially free. It's not happening. So now let's take the other example. This is you again. Now this version of you has $1 million invested. And you're like, you know what? I'm no longer like as good of an investor as that other version of me. That other version of me is twice the better investor, twice as good of an investor as this version of you. This version of you is like, hey man, I could just do the average, but I have way more money invested. So I'm not as good of an investor, but I got way more money invested. Whether you did it all at once or over time, you built it up to this dollar amount, but you got $1 million invested now. So now you're not going to get, 20% annual rate of returns. You're going to only hit 10% annual rate of return. And now this is just 1 year, just 1 year in this example. So now you got $1 million invested. You're going to get a 10% annual rate of return. Now, after that 1 year, what is your $1 million return? Like, what does your 10% annual rate of return look like on that $1 million? Well, it's going to be 10% of $1 million. That's going to be $100,000. Now, just look at the difference of that. Like, just by you solely having way more money invested in the account, you're going to get such a bigger return when it comes to like the total dollar amount is going to be absolutely massive when you compare it against that $2,000. Like that $2,000, there's just truly no comparison between that $2,000, annual rate of return, and then this other version of you that's getting a $100,000, annual rate of return. It's like a dollar rate of return. So if you're earning the version of you getting this $100,000 for your $1 million investment, you're half as good of that version of you that has the $1 million invested is half as good of an investor as the other version. But simply because you have more money invested, you are going to actually see financially greater returns. Ultimately, in the terms of like financially, you're going to see more. Like percentage wise, yes, the other version of you who only has $10,000 invested is going to be like, well, I beat that other version of me. Yeah, you beat them with the number in terms of like the percentage on the paper, but I think we would all agree that $100,000 is a lot more than $2,000. So this is why I say, rather than obsessing about getting the highest possible rate of return on your stock market's investments, rather than obsessing about getting the highest possible rate of return on your stock market investments, instead, what I really believe you should hyperfixate and focus on is building your stock market investment brokerage account to as high of a dollar amount as possible invested. So get as much possible money invested into the stock market, into your brokerage account as you possibly can. So that way, just like in this example, even if you're getting very average returns, once you have a large amount of income invested, those very average returns actually generate an equal large amounts of money, returning back into your portfolio. Basically, at that point, now you're just going to start to build wealth at an even faster and faster pace. And you're not even being a really great investor. You're not even beating the market. You're just a very average investor, but you have an above average amount of money invested. So again, this is why I say don't stress out and don't worry about getting the best investment or getting into the best investment. Worry and stress out about getting the most money that you can possibly get into those investments, and then let the rest take care of itself.